everybody, and welcome to another episode of the Oreninc podcast series. This is episode number 26, and again, I'm joined by Mickey Fulp, the Mercenary Geologist. Mickey, wonderful good morning to Vancouver.
Hey, thanks a lot, Kai. It's smoky here again. We had the same thing last summer, and the fires in the Okanagan and wherever. We got this haze in Vancouver, so it's kind of weird.
That's too bad, but you get the wonderful pine smell in the air.
Yeah, if that's what you want to call it.
Silver linings. You got to look for the silver linings, especially during this time of market.
Exactly, and it's not a good market.
No, and we as always, we got a small agenda prepared here, and I'm going to dive into the Oreninc Index here in a second, but things are looking dire. You're going to give us a quick update of the metals, the U.S. dollar, and what's happening to gold right now, and we're going to close off the podcast here with our number of the week, as always. So, as always, and as you guys have gotten used to, we're going to start off with the Oreninc Index. I'm going to give you a quick rundown of the terrible numbers we're seeing these days. Summer doldrums 2.0, 3.0, whatever you want to call it. It seems like it's the peak of the summer doldrums. Everybody's gone. No broker activity whatsoever over the last couple of weeks. Our index tanked even further. We're down to 12 points. The only thing that sort of saved us, or the only financing that saved us, was the coral mining financing. And they raised money from a private equity group out of London, Tembo Capital, raising $13.2 million, according to our data. And that made up over 55% of the overall total dollars raised last week. And that is a very sad state of the market we're looking at. And without that one single financing, we'd be in single digits right now. And one thing I wanted to point out as well, last week our index score was 15. And I think it's fair to mention, I'm not picking any names in particular, but Oreninc Resources was our largest financing last week with an open financing of $4.6 million. And they were looking to raise at $1.60 right now, and just because of the market right now, the stock is sitting at $1.30, and I'm guessing that it'll drag out the financing, and that's overall testament of what's happening. And I wouldn't even say it has to do with the quality of the company. It's just the overall markets, and it's just a perfect example of how difficult things are right now. Would you agree with me there, Mickey?
Well, I think so, but we soldier on, and these sorts of markets lead to stocks on sale. We talked about this last time, and it continues. And the good stocks that I'm watching have held fort. They haven't gone down any. In fact, a couple of them jumped up a bit on newsletter writer recommendations. But there's some good value out there right now, Kai.
Oh, definitely. And it seems like every company or companies that don't have institutional support or have institutional shareholders are faring better than the ones that actually did have institutional support, as those guys are liquidating right now as they see redemptions.
Yeah, that's what always happens in bad markets. The instos come in and start liquidating stocks willy-nilly because they got redemptions and they need the cash. So oftentimes in these bear markets, it's good not to have any institutional support at all.
No, that can be a pitfall. It can be a blessing and a pitfall as well. Let's talk about the price developments of the metals, the U.S. dollar, but also, most importantly, gold right now, Mickey. What do you see there?
Well, gold yesterday went below 1,200. It actually went as low as 1192. It sits at 1196 this morning. That's the first time it's been below 1,200 since late January of 2017. I think that the concern here would be that at that period of time, in January of 2017, DXY, the U.S. dollar, ranged from 103 in early January to over 100 in late January, when gold finally went above 1,200 and stuck there. So now we're looking at DXY at a 13-month high, but it's still, as we speak this morning, it's 96.6. So in relative terms, that means the dollar has lost more than DXY has gained. And I think that's of concern. It's broken resistance. Next is there, then who knows what the bottom will be. But once again, gold is a buying opportunity. trade tariff talk and trade wars and back and forth between different countries. We had copper below 275. Despite very good fundamentals as we speak right now, it's at 272. So it seems like every week in my weekly podcasts on the Metals, Money, and Markets Wrap, we're setting new lows in not only the precious metals, but certainly the base metals too.
Yeah, you mentioned the macro environment is not extremely bullish right now, but the mines in Chile are especially facing challenges right now, and the copper market does not react at all, like of like a month, and that's 5% of world production.
Yeah, the copper market is really separated from fundamentals. We're seeing very strong fundamentals, but the specs are in control and the shorts are.
Did you see anything changing besides Labor Day being the next trigger here?
Well, in the copper market, certainly with the threat of 3 or 4 big strikes in Chile, I would not want to be short the copper market right now. It's really driven by Chinese speculators and U.S. hedge funds. Other markets, certainly gold, I see no end in sight. I mean, it's really a technical chart right now. It's broken down, so the bears are in control, and I don't think we're going to see any improvement in that until Labor Day. You never know when it might bounce, but there certainly is concern in that end right now.
Yeah, countdown is ticking. I think we're 3 weeks away from Labor Day, so
absolutely,
I can't wait. To be honest, like as much as I enjoy the summer, but I can't wait for it to be over.
Oh, well, I'm still enjoying my summer. I can't, it kind of reminds me when I was a schoolboy and you would dread going back to school, and that was around Labor Day. So I never wish that to happen any faster than it does. But the Toronto Venture Exchange almost every day now is setting a 26-month low, and that if it would be back into what May, June of 2016, when we were really emerging from a 5-year bear market. So every day, the indexes I looked this morning was at 675, and once again, until gold turns around and Labor Day comes, I don't expect that to change.
No, it's also across all sectors, and the venture especially, it was earlier in 2018, was driven by pot stocks, but also to a degree by the battery metals, and that has all subsided. Even the pot stock in the Mariana space has sort of slowly died down or is quiet down over the summer, which is also dragging the index down, in my opinion.
Yeah, and the cryptocurrencies busted big time, so that contributing to it too.
Exactly. So the overall sentiment, people are losing money left and right these days, and it's just not helping. And just waiting for a better time period probably here. And Labor Day might be the trigger. Although I don't see it on a macro level, I don't see it, but a calendar level maybe. So, we've covered metals. We've covered the U.S. dollar to a degree. We've covered gold just a little bit. Mickey, what's your number of the week?
1,845,000, and that's the number of tons of copper concentrates and ores that China imported in July, and that's an all-time record. Meanwhile, we have net 30,000 contracts short in the copper market. That's a 12-year high. So the point being, and I mentioned this already, the copper speculators have disconnected from the fundamentals of the market.
Interesting. Okay, that's a good one. I like it.
What's yours, Kai?
I got a good one. I got a really good one, and it is zero.
Okay.
Do you know why? Because we have to wait zero months till football is back. Preseason started, and we're back. It's finally that's what I'm looking for. Besides Labor Day, I'm looking forward to the fall for some football. So.
Absolutely.
And after that, we're off to Beaver Creek. That's going to be another interesting indicator of the market.
Certainly will be.
Mickey, thank you so much for your time this morning, as always. and I'm looking forward to catching up with you again very soon.
Thanks a lot, Kai.
Appreciate it. Thank you.